Hello and welcome to Sectors Up Close. I'm David Pollard. Swiss chocolate, or perhaps a glass of Campari. When times are tough, hard-pressed households reach for the treats. That could be why chocolate maker Lindt, for example, is a favourite stock among European consumer staples for my guest today, Joachim Klement, Head of Strategy at Liberum Capital. Though for consumers, the outlook may already look a little sweeter after the latest data showed Eurozone inflation edging lower in July, extending a downward trend that started in the autumn. If at 5.3%, it is still more than twice the ECB's target rate. As for European consumer staples, with gains of around 5% year to date, they have lagged some other sectors and are less than half the gains seen by the overall Stoxx 600 year to date. Well, with me now is Joachim Klement, Head of Strategy at Liberum Capital. Joachim, let's start with the big picture here. Inflation looks a little more benign, but consumer staples have been struggling. What is your overall assessment of your top picks?
Yeah, most consumer staples companies have been struggling passing on higher wages and raw material costs to end customers, and that's why they've been struggling. The good news is that, as you said, inflation is coming down, and that means some of the input costs are coming down, and that should help these companies. At the same time, with inflation coming down, consumers can spend a little bit more on the little bit extra that might help companies like Campari or Lindt & Sprüngli.
Now, pricing power has emerged as a big theme in the latest quarterly results. Why is it some companies are benefiting so much from that whilst others are struggling to?
Yeah, take, for example, the chocolate world, where you have on the one hand the mass chocolate produced by companies like Nestle, and then on the other hand the premium chocolates produced by companies like Lindt. And while the mass chocolate producers have to compete on price, and hence can't defend high prices or can't raise prices in an inflationary environment, the premium chocolate producers like Lindt, for example, can. They have brands that are not that price sensitive, where consumers will buy them as a special treat, even if it costs a little bit more.
Let's take a quick walk through some of the stocks that you're watching. Two giant names in the sector are Nestle and Unilever. Nestle you call a bond amongst stocks, but you're rather more hesitant on Unilever. Why is that?
Well, Nestle is really kind of a steady growth stock. It has organic growth of 5 to 6% every year. Last year, even 7.5%. And no matter what happens, it's got such a diversified portfolio that everything is always growing at some moderate pace. Unilever, on the other hand, is restructuring its product shelf. It has been attacked by Nelson Peltz, the activist investor from the US, who now has a board seat, who pushed for a breakup or a significant restructuring of the company. Now, that is now in process. They're not going to break up or sell parts of the units, but they've increased transparency. They have first signs that that turnaround is working, but it is still clearly a construction site and under construction. So it's a little bit trickier to invest in that company now.
Well, let's also compare two sector darlings, one being Davide Campari Milano, maker of the iconic Campari drink, the other being your sector darling, which is Lindt & Sprüngli, famous for its chocolate bunnies, of course. How do those two companies match up?
Very opposite ends of the spectrum. They both reported the results for the first half or the second quarter last week. And while Lindt & Sprüngli beat expectations by 30-something%, Davide Campari missed expectations for the second time in a row. And this time even by quite a margin. It was 9% below expectations. Now, Campari blames bad weather and the forest fires essentially in southern Europe for the lack of sales. But there is clearly a lot of optimism priced in to Davide Campari's earnings, and it becomes harder and harder for the company to meet those expectations by investors and analysts.
So for an investor looking at the relative performance of these consumer staples against the overall Stoxx 600 index, why or why not is this a good time to jump into this space?
I think the space overall benefits from its stable earnings when the economy is slowing down, as we see already in Europe and expect for the US. So it is this kind of defensive contribution to your portfolio, which is also why it hasn't underperformed year to date when tech and a lot of cyclical sectors did really well. But you have to be careful. Within the sector, there's a broad range of companies. I mean, from specialists like Davide Campari and Lindt to the broad-based, very well diversified conglomerates like Nestle and Unilever. And we would emphasize companies that have a market niche and pricing power, like Lindt and Sprüngli, as the best picks within the sector.
OK, Joachim. Joachim Klement, Head of Strategy at Liberum Capital. Many thanks for sharing your thoughts. And that is your roundup of European consumer staples. I'm David Pollard, and this is Reuters.